Welcome to Just Ask Freeman TV. My name is Cynthia DeFazio, joined today by Freeman Owen Jr. He is president and CEO of Financial Sources Incorporated. To our viewers at home today, we're going to be talking all about RMDs. Do you know what RMDs are? Are there any implications for when you start taking your RMDs? Freeman has all the answers because, as you know, it's Just Ask Freeman. Freeman, how are you today?
I'm just excited, and it's good to be here this afternoon, or I should say this morning, bringing this show on and bringing information about RMDs because, and let me define RMDs.
Please. Mandatory
withdrawals from tax-qualified plans now at age 73. Well, many of you would have been familiar with the fact that that the time to take a mandatory withdrawal, IRS demands that.
Okay.
It had been age 70 and a half.
Which is so confusing.
Yeah, it is. As of January 2020, there was legislation that was passed, or just signed into law, where the mandatory withdrawal, referred to as RMD, required minimum distribution, was kicked to, or I should say, started at age 73. January of 2023, Congress decided bump it up another year at age 73.
Interesting. Okay.
Now, folks, you have been putting away funds during the accumulation mode for many, many years, 25, 30 years. And we had a show, or we did a show, where the contribution to tax-qualified plans were not taxed in the years that they were, in which funds were contributed to these tax-qualified
while they were
plans.
growing.
The 401ks, the TS, I call that the accumulation mode.
Yes.
All right. Little did you know that there are 10 IRA tax traps, or I should say, what I do is help you avoid the tax traps when it's time to take the RMD. You can see that on my book. So now we've got a new age. Starting at age 73, we take the mandatory withdrawal. The question is, suppose you forget to take that RMD in the year that you're supposed to start taking the withdrawal, and you say, well, I'm not going to take it this year.
Okay.
You got one deal, one shot. You can wait until the following year, April 1st, subsequent year, and then you decide to take RMD. What happens to the tax implication on that?
I don't know.
You're taxed twice. You had to take the mandatory withdrawal prior year, taxable, and the following year, by April 1st, taxable.
Wow.
Taxable distributions. Now, suppose the following year, you still don't take the RMD. If you do not remove those funds from the tax-qualified plan, Cynthia, you are subject to a 50% penalty. Now, in this year, I do believe they reduced it to, when I say they, IRS reduced that penalty to 25%.
Okay, that's better.
Yeah, well, that's better,
like,
but still, you got to pay the 25% penalty and the taxable amount on the withdrawal.
Yeah.
Okay.
Not good.
All right, that's not very good. Let's talk about inheriting IRA accounts. Since the new rule went into effect, January of 2020, our beneficiaries are impacted significantly. When I talk about beneficiaries, that is referred to as Secure Act Now 2.0.
Okay.
Okay. For the spouses, what I've designed for my clients, I made sure that husband and wife, let's say the husband lives to age 90.
Okay.
He's been getting guaranteed income. See, we did tax-efficient plans years in advance. See, we minimized these taxes, but we couldn't convert all the monies to the Roth. We got a little bit left.
Okay. All right. I'm following.
That's subject to taxation. So hubby lives to age 90, guaranteed income for life, will never outlive the income. Now, when he when he passes or dies, the spouse continues with the same income.
Oh, wow.
And she lives to age 100.
Okay.
That's why I always say we'll design income that lasts longer than you.
That's amazing.
Spousal continuation.
Okay.
Here's the big thing. Are you ready for this?
I think so.
All right. I have adult children. You have adult children.
Yes.
Let's take a 30-year-old, and if you look in the first few pages of the book, you'll see that Secure Act, and the mistake number 1 or either 2 in there. And what you'll see is the following. A 30-year-old has a life expectancy of approximately 53.3 years. Prior to the Secure Act 2.0, January of 2020, our non-spouses, our children, grandchildren, great-grandchildren could transfer wealth. What is left of the IRA could go to our kids, grandchildren, and grandchildren, spread over their life expectancy.
Okay.
The benefit was a lower tax bill.
Okay.
You get the tax the kids receive, I call them kids, but I got adult children.
Adult children, yeah.
They still look at them. But the thing is, they could receive the legacy or wealth that is transferred, let's say the 30-year-old, over 53 years.
Okay, not
The
bad.
benefit is a lower tax that is assessed on that distribution.
Sure, that makes sense.
Now, are you ready?
Yes.
Audience, are you ready? Clients have come to my office, and we're discussing the beneficiaries. Beneficiary designation is very important when it comes to these RMDs.
Okay.
I tell them what I just shared with you. All non-spouses. Now, there's factors in there in which you can just ask Freeman to get even more detailed on the non-spouse distributions.
Okay.
Or distributions to non-spouses. Mom, dad, siblings, children, grandchildren must liquidate every dime of a tax-qualified plan with a zero balance. Are you ready, Cynthia?
I'm going to try.
10 years.
No, 10 years.
10 years.
Freeman, 10 years. So I'm thinking that adult child, can't say kid, but you want to, that adult child
Right.
is probably, if I'm not mistaken, in their prime earning years. So if you only have 10 years to liquidate, could that bump them into a different tax
It sure
bracket?
can.
Wow.
And even more detailed, suppose that this husband, wife, the spouse has continued with the distributions, and suppose those distributions are subject to RMDs. What does the adult child, what kind of tax consequences is that? I got a solution. What do you say?
Just ask Freeman and claim the spot.
And claim your spot, folks. Just ask Freeman how I come up with a plan on distribution from these tax-qualified plans, knowing that their loved ones who are non-spouses must liquidate that tax-qualified plan, even the Roth IRA, which the distributions are tax-free, but there better be a zero balance in the 10th year. So the kids say, well, you know, we're doing good. Thanks, Mom. That originated maybe with Dad. We appreciate it. $100,000 left from a tax-qualified plan in the IRA. The 10th year, the kids said, nah, we got our own pensions. If they're blessed, we have plenty of money. Mom, Dad looked out for us, educated us so that we can go on our own and be independent. They don't want the $100,000. The reason I kind of giggled a little bit is because IRS don't care. They're taxed at $100,000 because there was no zero balance. Folks, we got a solution. Claim your spot.
Yes.
Just ask Freeman, get that iPhone or Android and take a picture or scan that QR code.
QR code.
And call, or either call us at 833-414-7233. I want the first 10 folks get on that landing page and get your free consultation.
Freeman, thank you so much. To our viewers at home, this is your opportunity to claim that free spot with Freeman. You have to do one thing. Just call in to 833-414-7233, or if you have your smartphone handy, you can grab your smartphone, click on that QR code, and that will take you right to the landing page for Freeman, and you can claim your spot accordingly. We are spending time today talking all about RMDs and some potential RMD nightmares. We have so much more with Freeman when we return.
I was a student at Howard University and transferred over to Federal City College at that time. I got a couple of degrees in mathematics and statistics. I worked as a mathematician, mathematical statistician. Climbed the ranks there, reached a pinnacle in my late 20s. This opportunity in the financial services world spanned it now over 40 plus years. It all started with me having an interest in mathematics, science, technology, and engineering. Started in the business, got licensed. I didn't have any fear. Let me share a personal story. I've been married to the same lady for 51 years. When I quit working as a mathematical statistician, she says, well, you've been successful in everything else. I'm 27 years old at the time. You'll be successful in this. And there was no looking back. I'm not the type of person that could work a job per se. I had to have, and a quote, I got this from a great mentor, freedom with responsibility. Because I always say, if you do this, you get nothing back. But if you do this and give, blessings flow. And that's basically how I started in this business and how my career started. Well, I had two careers, the first one and, of course, this one, which I love the best.
Welcome back to Just Ask Freeman. My name is Cynthia DeFazio, joined today by Freeman Owen Jr. He is President and CEO of Financial Sources Incorporated. We're talking all about things that are RMD related today, talking about some nightmare situations. But I have one question for Freeman, a very important one. Freeman, how does someone determine their RMD amount? How do you calculate that? What factors go into play?
Well, I have software that I can actually determine, or the software will determine the amount that must be taken out of a tax qualified plan. But many companies that I deal with will automatically, or they will use their software to provide the RMD amount that must be taken out of their tax, or I should say their IRA, or even their tax qualified plan, such as a TSP or a 401k.
Okay.
They look at 1231, the amount that the IRS says, well, look, there's a certain amount that you must take out, and there's a percentage. And the interesting thing about that percentage is that at attained age 73, let's say approximately 3.65, okay, but each attained age, 74, higher percentage, 75, higher percentage. You get to age 80, you're talking close to 5% of your lifetime earnings that have to be removed, else there's consequences.
Wow.
Well, I got the solution. Just ask Freeman. Claim your spot. Hit that barcode, or I should say QR code.
Yes.
All right. And then
we know what
go
you
to our
meant.
landing page and schedule your free consultation, or give us a call. We got operators standing by, 833-414-7233. I'll show you how to get your RMDs and minimize your taxes on the distribution.
Okay.
All right? And help you avoid the costly mistakes. Didn't see my book slide up there, but the IRA mistakes, there it is.
Perfect.
The top 10 IRA mistakes, that is an important read. I always give that book to the folks that become clients. There are 10 basic mistakes in there, and RMD distributions. I spell it out, and we resolve that issue of the consequences of not taking those funds out in the 10th year. Well, you ready for this?
Yes.
Suppose our children or nephews and nieces or siblings say, we don't need that money. We're going to wait till the 11th year. IRS don't care. They go right in there and tax what should have been taken out.
Really? Okay.
Yeah, and there's basic rules, and that's why I take the time and make sure that our clients have designated the beneficiaries properly.
Okay.
And update. There are losses in the families, there's addition in families, and when we have the annual reviews, sit there and write down, oh, you got a new grand, this is a new grand, or this is a new great-grand. And we make sure that they designate the beneficiaries correctly, and they get the financial literacy on distribution, mandatory distribution for our loved ones that are non-spouses, that is. Poof. There better be a zero balance there, but I got a solution for that. There's several of them. Just ask Freeman. There's that QR code, I see it. Take your phone, scan it, schedule. There's a landing page there. It's a free consultation. And I don't have to charge fees because I'm compensated by the various companies I represent. Just that simple. And that's another thing that eases the minds of clients. How much you charge in fees?
Yeah.
Nothing. You know, and if you're not the type of advisor scuffling and scraping, you just deliver the service, you're compensated by the companies, but you do a good quality service, and what happens? You're able to educate the client about required minimum distributions, how their beneficiaries learn the tax laws, because there have been many federal employees have come to me, and they are ranked high net worth federal employees, and I asked them, I said, have you heard about the Secure Act 2.0? No.
Wow.
Again, educated people, six-figure income individuals in these jobs in the federal system have no clue what the Secure Act is and how it impacts them when it comes to their beneficiaries. So it's good to help the clients in just simple language.
Yes. Complex
rules, you don't need to hear with, by with. My clients want to know, Freeman, what are the consequences of if my beneficiaries do not take out every dime and liquidate those funds down to a zero balance, what happens?
Yeah, they need to know that.
They need to know that. And the percentage that IRS would assess on not taking that distribution, well, that could put the beneficiaries in a higher tax bracket.
Of course.
And you see, Cynthia, that's why I always have annual reviews, and I ask them, please bring your adult children to these annual reviews. Now, some clients say, no, I'm gonna spend my money. You know?
Every penny, it's all gone.
I'm gonna spend it down. But for the most part, many of our clients, I'll say the majority, would like to transfer wealth to their children, grandchildren, or the great-grands, nieces, nephews. They're concerned, and then they really pay attention when I say now, are you, like I did you, I said, are you ready for this? They are used to the 70 and a half beginning age to start receiving the required minimum distributions, and their loved ones' wealth is was transferred, could be, over the life expectancy of their non-spouses.
Wow.
Not anymore, okay? You gotta coordinate the retirement income too. That's why I'm a big advocate of converting traditional IRA monies, even for those who cannot contribute to a Roth, converting the funds that we roll over into a Roth IRA and minimizing. And I got another vehicle I use too. Index Universal Life.
Hold that thought. I want to dive into that, but we
Okay.
have to take a commercial break,
All right.
so don't lose that thought.
I'm right here.
Okay.
Just ask Freeman. All right, I'm not going nowhere.
To our viewers at home, we have to take a very short commercial break, but this is the perfect time for you to just ask Freeman all of your questions regarding RMDs, beneficiary designations, all of the tax implications that come along with your RMD distributions. You deserve to have the answers that you seek. Just ask Freeman, 833-414-7233. You can claim your one-on-one spot just by calling that number, or better still, if you have your smartphone, click on that QR code at the bottom corner of your screen. That will take you right to the landing page for Freeman, and you can book your time accordingly. We're going to take a very short commercial break. Don't go anywhere. When we come back, I have so much more with Freeman, including Index Universal Life, when we return.
I focus in on making sure that folks have emergency funds, credit card debt taken care of, no big ticket items to purchase on this journey. I ask them about their health. What role will they play? Do you have siblings? Do you have dependent children? I've had breakout workshops, especially for the young people, so they have financial literacy as they approach even for college. I used to do dinner seminars. I'd invite existing clients to bring people, think about their birthdays and so on. Just people want to know that you are concerned about their best interest, and that works well. It's very, very enjoyable type of work that you can do. And these folks prosper with just a little bit of adjustment to their retirement planning.
Welcome back to Just Ask Freeman. My name is Cynthia DeFazio, joined today by Freeman Owen Jr. He is president and CEO of Financial Sources Incorporated, and we are talking all about things RMD related. We're going to jump right back into the IUL, Index Universal Life. Freeman, why do you love to talk about that product specifically?
Well, if a person is, when I should say suitable, or there's not a lot of health issues, but we can have an Index Universal Life that protects the IRA.
Wow.
Let me paint the picture, because I'm going to ask folks to just ask Freeman to get it done. All right? Let's say I got a 55 or a 60-year-old, and I'm going to make it, for brevity's sake, I want to make it simple. There's a $100,000 policy there that I put on the client. The client has lived to age 90. But there's a $100,000 policy there, and there's $100,000 that goes to a non-spouse, son, daughter, doesn't matter. The IRS been waiting. Boy, I'm gonna get this distribution. I got a little bit along the way with the RMDs. I got some. That's the harvest. Now I'm going to the next generation and get some taxes. I always say, not on my watch. Here's how that
Not
works.
so fast.
Not so fast now. The $100,000 policy provides additional income to the owner,
Okay.
tax-free. And you structure it so that they get tax-free income to supplement what? Social Security,
Yes.
if they're blessed to have a pension, if they're lucky, and any other income-producing assets. Now, you got the $100,000 policy sitting out here. Take $30,000 out. You got a 45, 50-year-old grandchild or son or whatever. Take $30K. How much you got left for the $100,000 policy? 70.
70, yes.
Here, IRS, there's your money. That $30,000 paid for the tax liability for the distribution of the IRA. Now the IRA is paid for, no taxes.
Wow.
$70,000 left tax-free. See, we don't sell products, folks. What we do, create strategies to minimize taxes and outpace inflation, make sure that wealth is transferred to our loved ones. Now you got 70 tax-free
Okay.
plus 100.
Wow.
Tax-free. So $170,000 is transferred to that non-spouse.
That's fantastic.
And all that, see, everything is built on top of everything else.
Yes.
Because the initial visit, my clients, I got about a over 40-some years, about a 98% persistency rate.
Wow.
This client's been with me when my hair was black. They've been that long. They've been a long time, and I keep them. And there are stages of distribution, let's start it this way. That's why I said the accumulation stage.
Yes.
There are stages of accumulation. When you get 55, we're going to go through the numbers presentation.
Absolutely.
The age, the birthdays.
Yep.
My clients are concerned about distribution. How does RMD impact me? What, they don't know the new rules. I have to provide the rules.
Of course.
Some of them do, some of them don't. How can wealth be transferred to my children, my grandchildren? Will this money last since I'm taking RMDs?
Yeah.
I have a solution for that. Claim your spot, folks.
Yes.
Just ask Freeman. Sign up. There's a landing page.
Yes.
You go to when you hit that QR code. Or call us at 833-414-7233. You know what that 7233 is? No. SAFE.
Oh, I like that.
833-414-SAFE. And what I do is stay right in my lane.
Yes.
And make sure that my clients protect the wealth that they have accumulated, have the proper distribution rules, how to transfer wealth from one generation to the other, minimize taxes, increase guaranteed income, surround them with a veil of protection.
Yes.
Some of the products we're going to discuss in detail, how we are protected against probate, creditor claims, lawsuits, and Medicaid spend down. That's another show. We're going to talk about that show coming up here in the upcoming weeks here.
Absolutely.
So I'm going to turn the close up to you.
Okay.
I just want to thank our audience today.
Yes.
For tuning in. And we've got, like I said, financial literacy, new content,
yes,
just stuff that is so great for our viewing audience.
Freeman, thank you so very much. To our viewers at home, most specifically, we'd like to thank you for spending time with us today on Just Ask Freeman. We know that you have a lot of questions for Freeman about how to plan your perfect retirement. This is the opportunity for you to call in and claim your spot with him today, 833-414-7233, or grab your smartphone, click on that QR code. Be safe, be happy, and be blessed. We'll see you back 1 week from today on Just Ask Freeman with Freeman Owen Jr. Thank you.